let's look at problem 2-3. So basically to do this, you just got to remember that assets equal liabilities plus stockholders' equity. That formula is what we're going to use here. Now, stockholders' equity is made up of two things, right? It's made up of the contributed capital, meaning investments from outsiders, and retained earnings, investment in ourselves that we keep. All right, so now we know that, we can figure these out. So if we want to figure out this part, we know, well, total assets equals current assets plus non-current assets. So if I take 14,040 and how much do we need non-current assets to be to get to that? Well, you could actually use formulas here and you subtract them and you say, well, it's got to be that. It's got to be 8,840. And if you look at liabilities, the total liabilities equals the current plus non-current. So I'm going to just add these up. There you go. So we got those two. Now this one is good. Total liabilities and equity. Well, assets equal liabilities plus stockholders' equity. So it has to equal the 14,040, right? And the only one we have left is the common stock. So the contributed capital is the common stock plus the additional paid-in capital. So if you take the total contributed capital and subtract out the additional paid-in capital, you'll get that what common stock has to be. So just using these formulas for each of these is really how you go about getting the answer. So here's another example of one of the kinds of problems we might see. This is basically helping you to understand the difference between cash basis and accrual basis. So for example, the ABC company sells 10 copiers to XYZ. They sell them on October 15th for $40,000. Now, ABC delivers the copiers in October. So the accrual basis would show the revenue for ABC company to be in October. Now, they receive $40,000 in October. I'm sorry. They receive $16,000 in October, and they receive the rest in November. So if you were looking at the accrual method, they receive some money in November. However, that doesn't matter. If you're doing the accrual method, it's when they delivered the copier. It's when they did their part. So since ABC delivered in October, that's when they recognize the revenue, no matter when the cash was received. Now, if you're using the cash basis, then you only recognize $16,000 in October, right? Since $16,000 is in October, and that's how much was paid under the cash basis, is $16,000. And in November, they recognize the rest. So they would recognize $24,000 in November under the cash basis. How much would they recognize in, September? None, because no cash changed any hands in September, so ABC wouldn't recognize any revenue in September. On the accrual basis, again, when did they earn it? They earned revenue of $40,000 in October and 0 in November. The reason they earned 0 in November is because they did their part already in October. So the accrual basis is when you did your part, when you did what you were supposed to do. The cash basis is when the cash changed hands. When did you receive the cash? That's the difference between the two. So you have to be careful when you look at these problems and read it carefully to see which method they want you to use and which month they want you to use.